Hello investors and traders. This video will explain average directional index, ADX indicator. It will also explain how to use this technical indicator in your investing or trading system. It's about learning how to put rules together to formulate a rule-based system. Some questions we will answer today is: what is average directional index, ADX indicator? How to use the ADX indicator? What are our rules to trade the ADX indicator? So before we get started, you know our catchphrase: study it, analyze it, adapt it. ADX, Average Directional Indicator, is a creation from technical analysis expert J. Wells Wilder. It's clear that Wilder was attempting to do two things with the ADX indicator. Number one, inform a trader when the market is trending. Number two, filter out counter trend trades to keep you on the right side of the market. ADX is part of a suite of indicators created by Wells to analyze the market. In this video, we will briefly touch upon the background for the ADX indicator, but we will quickly shift our attention towards using the ADX with other indicators to access what if we are able to define an edge. The momentum indicator, ADX, is comprised of the following components. Number one, plus directional movements index, DI plus. Number two, minus directional movement index, DI minus. 3, ADX line. Kind of throws you off a little, right? You should expect to only see the ADX line, but the ADX line itself is a smoothed out average of the difference of the DI plus and the DI negative. Now a couple points to highlight. The ADX cannot have a negative value, so it's not like the other oscillators that may fluctuate above and below a zero line. The ADX is relative to its own price. Therefore, a 50 reading in IBM is nowhere near as volatile as a 50 reading in Bitcoin futures. This is a key point to remember because price moves can vary widely between securities, and you do not want to apply a specific trading methodology only to realize your security of choice was not a good fit. ADX Overview. Trading in the direction of a strong trend reduces risk and increases profit potential. The average directional index, ADX, is used to determine when the price is trending strongly. In many cases, it is the ultimate trend indicator. After all, the trend may be your friend, but it sure helps to know who your friends are. In this video, we will examine the value of the ADX as a trend strength indicator. Introduction to ADX. ADX is used to quantify trend strength. ADX calculations are based on moving averages of price range expansion over a given period of time. The default setting is 14 bars, although other time periods can be used. ADX can be used on any trading vehicles such as stocks, mutual funds, exchange traded funds, and futures. ADX is plotted as a single line with values ranging from low of 0 to high of 100. ADX is non-directional. It registers trends, strengths, whether the price is trending up or down. The indicator is usually plotted in the same window as the two directional movement indicators, DMI lines, from which ADX is derived. When the plus DMI is above the minus DMI, prices are moving up, and ADX measures the strength of the uptrend. When the minus DMI is above the plus DMI, prices are moving down, and the ADX measures the strength of the downtrend. The chart above is an example of an uptrend reversing to a downtrend. Notice when the ADX rises during the uptrend, when plus DMI was above minus DMI, when the price reversed, the DMI crossed above the plus DMI and the ADX rose again to measure the strength of the downturn. On first glance, ADX is a bit alarming with the up and down movements and unsmooth nature of each line. Do not let this image intimidate you. Taking things back to what we previously discussed, the ADX is here to do two things. 1, determine the direction, and 2, strength of trend. Let's go look at an example. This is the QQQ NASDAQ 100 on October 7, 2022. The red line is the negative DI, the green line is the positive DI, and the blue line is the ADX smoothed out on a 14-day. You can use the 8-day, you can use the 14-day, you can use the 5-day, depending on what system, what securities you are using. As you see, the last 2 months has not been positive in the market, and the red line has consistently been on top, showing a bearish indication. Now, if you go back into the good days in June 2021, July 2022, and August 21, you can see the propensity of the green line to be on top. Thus saying, when the red line is on top, have a tendency to be bearish. When the green line is on the bottom, have a tendency to be bullish. The extreme levels have not helped us at really much all, as we can see these extreme levels where other indicators extreme levels means it's time to reverse direction. This even further tells us that we are even going lower. We can also see crossover points. When the green line and the red line crosses, we can see a direct indication of the market going in the right direction that we would want it to go. So the ADX lines are very useful, but must be coupled with other indicators. We can use the ADX line as a weight of evidence to tell us which direction this market is going. Determining trend direction. If the DM plus is above the DI minus, the security is in an uptrend. Conversely, if the DM minus is above the DI plus, the security is in a downtrend. Strength of a trend. Wells realized that the DMI lines are in constant motion and will provide signals after signals. This is where the ADX line itself plays a critical role. The ADX allows you to measure the strength of a trend. Wilder instructed readings above 25 are trending markets and readings below 20 are choppy or sideways markets. This, of course, is completely your call on what ADX readings will trigger you to trade. Below are general guidelines for how to interpret the trend. Quantifying trend strength. ADX values help traders identify the strongest and most profitable trends to trade. The values are also important for discussing between trending and non-trending conditions. Many traders use the ADX readings above 25 to suggest the trend is strong enough for trend trading strategies. Conversely, when the ADX is below 25, many will avoid trend trading strategies. Low ADX is usually a sign of accumulation or distribution. When ADX is below 25 or more than 30 bars, price enters range conditions and price patterns are often easier to identify. Price then moves up and down between resistance and support to find selling and buying interest, respectively. From low ADX conditions, price will eventually break out into a trend. Below, the price moves from a low ADX price channel to an uptrend with a strong ADX. The direction of the ADX line is important for reading trend strength. When the ADX line is rising, trend strength is increasing and price moves in the direction of the trend. When the line is falling, trend strength is decreasing and the price enters as a period of retracement or consolidation. A common misinterpretation is falling AD line means the trend is reversing. A falling AD line only means that the trend strength is weakening, but it usually does not mean the trend is reversing unless there has been a price climax. As long as ADX is above 25, it is best to think of a falling ADX line as a simple less strong. Trend momentum. The series of ADX peaks are also visual representations of overall trend momentum. ADX clearly indicates when the trend is gaining or losing momentum. Momentum is the velocity of a price. A series of higher ADX peaks means trend momentum is increasing. A series of lower ADX peaks means trend momentum is decreasing. Any ADX peak above 25 is considered strong, even if it is a lower peak. In an uptrend, price can be still rise on a decreasing ADX momentum because overhead supply is eaten up as the trend progresses. Knowing when the trend momentum is increasing gives the trader confidence to let the profits run instead of existing before the trend has ended. However, a series of lower ADX peaks is a warning to watch price and management risk. The best trading decisions are made on objective signals, not emotion. ADX can also be shown momentum divergence. When price makes a higher high, the ADX makes a lower high. There is a negative divergence or non-confirmation. In general, divergence is not a signal for reversal, but rather a warning that the trend momentum is changing. It may be appropriate to tighten the stop loss or take partial profits. Anytime trend changes character, it's time to assess and or manage risk. Divergence can be lead to trend continuation, consolidation, corrections, or reversal. Strategic use of ADX. Price is the single most important signal on a chart. Read price first and then read ADX in the context of what price is doing. When indicators is used, it should add something that price alone cannot easily tell us. For example, the best trends rise out of periods of price consolidations. Breakouts from a range occur when there is a disagreement between the buyers and sellers on price, which tips the balance of supply and demand. Whether it's more supply than demand or more demand than supply, it is the difference that creates price momentum. Breakouts are not hard to spot, but they often fail to progress or end up being a trap. However, ADX tells you when breakouts are valid by showing when ADX is strong enough for a price to trend after the breakout. When ADX rises from below 25 to above 25, prices is strong enough to continue in the direction of the breakout. ADX is a range finder. Conversely, if it is often hard to see when price moves from trend to range conditions, ADX shows when the trend has weakened and is entering a period of range consolidation. Range conditions exist when ADX drops from above 25 to below 25. In a range, the trend is sideways and there is a general price agreement between the buyers and the sellers. ADX will meander sideways under 25 until the balance of supply and demand changes again. ADX gives a strategy signals when combined with price. First, use the ADX to determine whether prices are trending or non-trending, and then choose the appropriate trading strategy for the condition. In trending conditions, entries are made on pullbacks and taken in the direction of the trend. In range conditions, trend trading strategies are not appropriate. However, trades can be made on the reversals at support long and resistance short. Find the ADX value that works for you. One thing I want to be absolutely clear about before we go deeper: not Wilder nor AI can detect you to what ADX readings are suitable for your trading style. If you like to scalp small moves, then 0 to 10 reading could be perfect for you. If you are in a biotech penny stocks that fly up and down, 75 to 100 occurrence could be your sweet spot. I do not want to give you the impression that I'm flip-flopping. I just want to be clear. The numbers detailed in this video work for me but are not absolute rules. You will need to test and learn to see which numbers are best for your trading style. Buy on cross. If you look on the web, this is a standard setup you will find. The ADX is above 25 and the green or the red line crosses one another. This will trigger an open order, and since the ADX is trending, you will avoid getting into a whipsaw situation. In the ADX indicator strategy, you will hold a position until the green light or the DM plus crosses beneath the D minus line. Extreme ADX readings are not created equal. I started this early in this video, but it was likely overlooked, so let me reinforce this point. ADX ratings are relative to the security you are trading. Therefore, my high volatility traders should not get overly excited every time you see a 50 ADX value. Where is the volatility if you just look at the prices and trend without any prices? You would surely think this is a home run trade. Therefore, you know ADX value, but more importantly, understand how your security trades and if price action aligns with your ADX trading strategy. Combining ADX with other Wilder indicators. I believe you need to combine the other wild indicators to really put together a full ADX trading strategy based on volatility. Wilder's most popular indicators are ADX, RSI, average true range, ATR, and the parabolic SAR. Relative Strength Index, RSI. The RSI is a great oscillator for measuring strength. Now, when it comes to combining the indicator with its cousin, the ADX, I am not a fan. RSI ATR conflict. Earlier in this video, we discussed how you can open positions as the DM lines cross one another and the ADX is a certain threshold. How do you reconcile the signals? For me personally, it creates too much clutter on my chart, and while the RSI can be used as validation technique of the broader trend, when you get down into buy-sell triggers, it could cause more confusion. In summary, the ADX is a valuable tool because it focuses on the trend and strength of move, determine which ADX readings make the most sense for you and your trading style. Avoid adding indicators to your chart that will make analysts more complicated than it needs to be. Extremely volatile stocks will not always adhere to the ADX readings. Securities that react favorably to the ADX have high volume and reasonable volatility. The bottom line, finding friendly trends. The best profits comes from trending the strongest trends and avoiding range conditions. ADX not only identifies the trending condition, it helps the trader find the strongest trends to trade. The ability to quantify trend strength is a major edge for traders. ADX also identifies range conditions so a trader won't get stuck trying to trend trade in a sideways price action. In addition, it shows when price has broken out in a range without sufficient strength to use trend trading strategies. ADX also alerts the trader to changes in a trend momentum, so risk management can be addressed. If you want the trend to be your friend, you better not let the ADX become a stranger. I encourage you with the ADX. Study it, analyze it, adapt it. Peace.